Millions of hardworking Americans are quietly losing thousands of dollars every single year to the U.S. tax system, completely unaware that the federal government has left a legal loophole wide open for them. If you ignore this one structural mechanism built into the American corporate system, you are essentially rejecting free institutional money. Meet John, who figured out how to fix this. John uses a 401k, an employer-sponsored retirement account defined under the United States Internal Revenue Code. It allows American employees to automatically save a portion of their salary. The massive advantage here is that traditional 401k contributions are made using pre-tax dollars. This directly lowers your current taxable income in the United States every single fiscal year. For example, if John earns $5,000 a month and contributes $500 to his account, the government only calculates income tax on $4,500. But here is the absolute critical part you cannot afford to miss: the employer match. Many U.S. companies offer to match your contributions up to a specific percentage. If John contributes 3% of his salary, his employer might instantly add another 3%. This effectively doubles his capital input instantly, requiring absolutely zero extra individual effort. Inside the account, this compound growth mechanism begins to accelerate. Over decades in the American market, those tax-deferred dollars compound continuously, generating a massive financial safety net. Your funds do not just sit there idle. The account structure allows you to select from standard mutual funds or index funds, tracking broad economic market performance historically. However, the United States government has very strict boundaries. If you attempt to withdraw these funds before reaching the age of 59 and a half, you face heavy penalties. American employees can choose between a traditional 401k, where you pay taxes upon retirement withdrawal, or a Roth variant, where you contribute post-tax dollars for tax-free future withdrawals. Understanding the exact structural differences between these accounts determines whether you build lasting financial stability or leave massive corporate benefits completely unclaimed on the table. Drop your biggest question in the comments right now as I respond to every single one of them. Make sure to hit that subscribe button, slam the like button, and click right here to unlock the full blueprint immediately. Disclaimer: this video is for educational and informational purposes only. It does not consult with a certified professional in the United States before making any financial updates or investments.